Hello traders, hello everyone, my name is Gregor and welcome to our new episode Surfing the Elliott Waves, where I will look at some of the most important developments for this week. This video has been brought to you by Orbex. I will look at the Euro, cable, crude oil, S&P 500 and also dollar NOK. Now, as you know, market slowed down a little bit ahead of Jackson's Hole meetings. We will most likely get more details from the meetings during this weekend. So if you are trading markets, any markets, not only FX, just keep in mind that there can be some gaps coming into Monday or next week opening. But before that, we have still prelim GDP from the US, and then you have some inflation data, I believe, on Friday. So these are obviously also important economic events that could define where the market could move from here. Because as we know, based on these economic details, we obviously will get more indication of what Fed may do on the next meetings. Will they remain hawkish until they reach the target of 2% on inflation, which is their main goal? Or maybe will they have to do a little bit of a step back if we are headed into the recession? So looking from an Elliott wave perspective, I still think that there can be some more risk of coming into the next few days. If you look firstly on the S&P 500, this is a very nice bullish impulse here away from that July 14 low, which has faced now a corrective setback. And usually these corrections are made by minimum 3 waves. So I would not be surprised to see more weakness here, since I see prices only in a wave B, still only second part of this incomplete decline. So even if a reversal down from August highs is going to be just temporary, and let's say we'll face limited downside around 4,000 levels, there is still room for more weakness until we see an ABC drop. More importantly, I can count 5 waves down as well here into this wave, a very sharp one. So based on probabilities, I think that this stock market could be headed lower. Let's not forget that US dollar is also still in uptrend, which makes bearish case for stocks. So if we look at not the US dollar, but actually on the euro dollar, which is somehow opposite from the US dollar index. So here what we updated recently is here looking for more weakness into wave 5, because notice that this latest recovery back towards parity somehow looks corrective because it's in a 3 waves. Okay, if a reversal would be sharp and very strong to the upside back above 101.25, then obviously I would say that maybe low is in place. But since this is not the case, and parity, as you know, is somehow bull bear line, at least for this week when you're looking at the euro. So I think that as long as we are below parity and that bulls are struggling here, I think that we just should be aware that there can be a drop coming into this fib extensions here around 0.98 levels taken off this wave 4. So these are the 138.2% and 161.8% of that wave 4. So normally that would be your primary target for a 5th wave down. But I still think that on a big picture, on the longer term scale, definitely the euro dollar is coming into some multi-year super zone. As you know, there is a lot of pessimism around the Europe because of Ukraine, because of energy crisis, economic crisis will follow. Then you have more also potential new lockdowns coming in a few months. So this is something that waits on the euro dollar, and this bearishness may not end anytime soon. However, looking at this chart from a technical perspective, we are approaching multi-year support zone. Even here back from September back in 2000, there was a latest ECB intervention on this pair, and if maybe they're trying to bring down the inflation, maybe one way to do it is maybe to intervene, because if you are a net importer, obviously a stronger currency, stronger euro could help inflation to come down. Keep in mind that this chart also shows perfect obviously correlation between inflation rate and the euro dollar. You can see that when inflation was picking up, of course euro dollar is now coming to the downside. So it definitely would be helpful if the euro dollar could get stronger, and one way to do it by the ECB is also to stay to be a little bit more aggressive and hawkish, but of course they are afraid because of this recession risk and other issues that Europe has. And now let's take a look also on cable. Now, Bank of England, as you know, was one of the few banks who admitted that they are afraid of recession risks, and obviously there is a lot of pessimism on this currency, especially versus the US dollar. So looking at the updated wave counts here, I'm seeing prices coming out of this triangle, out of consolidation, very sharp drop, which means that you are in a fifth wave since already market retested that lows from July. Now looking at the 4-hour time frame chart, well, I think that this could be now consolidation in a wave 4 while the market is trading below 1.2 level. It's a very strong psychological level. So again, as long as we are below this level, I think that there can be more weakness coming. Notice that this level was tested already before. Firstly here, actually back in July, when we have seen very strong recovery, then very choppy price action above that 1.2 level, but then after double retest of this price, we have seen a very strong drop. So clearly there is a strong drop, appears to be like a very strong indication that bears are now much stronger while they are trading below 1.2 level. So watch out for potential drop even towards 1.15. If we see obviously this overlap with 1.2, then I think that low could be in place. Now let's take a look on the crude oil. Now energy crisis is still here. OPEC may cut some productions in a few months, especially if again somehow this COVID crisis lockdowns will be here. So this is something that will also define obviously next prices on oil markets. Also Russia and Ukraine is also not anywhere going to end here, this story. So I think that this is something that we have to consider, and I would not be surprised if we see crude oil going higher. Now looking at this market from an Elliott wave perspective, or just from a basic technical point of view, you have a very nice wedge here going on that we've been tracking lately, and more importantly, the price has now confirmed that this wedge could really be the case, because notice that price recovered above this trend line, and also obviously above the trend line. If you will try to connect it from the highs, you will see that we are now trading already above $95 per barrel, which was also the previous swing high. So whenever you see that we are here in a bear market, okay, and then you see a sharp reversal that's trying to break the first resistance here, this breakout is the first indication that trend is changing back to bullish mode, even if just temporary. And in such case, what I would expect is a minimum pre-wave rise, like an ABC move. So I think that there is room for more upside, not to mention that whenever these wedge patterns or ending diagonals are finished, but I will just try to stick more to basics. Let's say that when wedge pattern is finished, price can retrace back to the starting point of the wedge. So if I try to somehow ignore the wave count and where the starting point of the basic wedge pattern could be, well, most likely this would be at this area around 104, 105, or possibly even this. So I would not be surprised to see market trading much higher while the energy is above the recent low at $85 per barrel. Now let's take a look also on dollar NOK. Keep in mind that last time we talked that Canadian dollar could see more gains if crude oil will stabilize, and this somehow has been the case. We have seen Mexican peso coming higher, we have also seen Canadian dollar coming higher, and now we have also see this NOK coming higher as well. And from an Elliott wave perspective, if you look at the higher degree time frame charts, notice that price has stopped at this resistance here around 38.2% to 50%. So I think that this could be a very nice new swing, multi-month swing reversal to the downside, especially since the previous drop was made by 5 waves. So I think that there can be more weakness coming. And on this 4-hour chart, as I showed you earlier, well, you can count 5 waves down here into these levels and then an ABC formation. So I'm looking at this as a temporary sideways consolidation. So I would be looking for much lower prices here. Also, there is another valid interpretation where I could say that maybe wave C will move to the second resistance area. Okay, let me try to adjust the wave count here real quick. So in such case, the first leg here to the downside should be labeled as an expanding diagonal. So you can see here that I'm looking at the two different interpretations, but even this one suggests a reversal to the downside, but from a second resistance, which is around 10. This is also very nice round figure psychological level as well. So watch out for these two resistance levels, but both suggest the same thing. As long as we are trading below this high, I think that this market could be headed to the downside, and especially if crude oil will stay in uptrend. If suddenly we will see some support on stocks, then of course this would be positive for some of the commodity currencies as well. So looking at this again at the stock market, watch out what will happen here after this wave C drop. If maybe market will try to stabilize the whole market, of course, or maybe will continue to much lower prices. But this, let's go somehow step by step, and I will come to you with more updates as the price action unfolds. Traders, trade well. Bye.